of where we kind of started our subwave. So what we know about Elliott wave theory is that the subwave 4 is generally where we find support before we begin our next cycle up. And so if all this is wave 1, if we have 5 waves here, then we class that as wave 1, right? And so then we have this weird structure. I believe it's probably a W, X, and a Y, where we have a 5 wave down ending, some kind of ending diagonal, the 5th perhaps, but 5 waves nonetheless. But we find support at the golden zone. So there's our wave 2. And now we're beginning the wave 1 of wave 3. And so taking out the subwave 4 of wave 3, that was an important one that I was very aware of. And okay, so now that we have that little context in mind of how I view that, let's go back to the fixed range volume pools. So in theory, when you have fixed range volume pools on impulse volume, once you reclaim the volume level, once you reclaim the value area low, you look to take it to the point of control. If you blast through the point of control, or you say consolidate at the point of control, finding support, you expect there's an 85% chance you're going to take out the high. And again, this was my mistake by telling you guys I'm expecting a lower low, because I just didn't turn on my folder. It was as simple as that. I didn't turn on my folder. So, I mean, maybe if I had it on, I could have helped in another way. But you can see that's what happened. We reclaim the value area low, we go take out the high. And it just so happens to be the perfect scenario, because the count that I'm looking at, I see a wave 1, a wave 2, there's a wave 1 of the third wave. So with that in mind, we got this long, nasty wick on the weekly time frame, right? And then we got the impulse, right from the open, we got the impulse. And I was saying that I don't believe that this is going to close. I don't believe that the weekly open of this candle is going to be lost by the time the week's done. It just doesn't fit the scenario anymore for me. And so I was also saying that we got to keep in mind today's a Tuesday. And if you look at the history of the chart, generally a Monday or Tuesday is when you put in your high. So I was saying that I wouldn't have a problem with price stopping right where it is. Not because I want Jim stopped out, but because of the confluence that would be here if that were to be the case. Now, even if we were to come higher, it would still be confluent, right? The golden zone will still be at that weekly level. But why do I like it right there? Because the 618 lines up with that weekly support, and the 66 lines up with the value area low. So then we could say that, okay, we're back inside of our range now. So I was also saying if we come back below 25,108, which is the value area high, there's a high chance that we're going to see another rotation back to the low, which would also fit the scenario for a wave 2 being put in. So therefore, we could have something like a W. We have A, B, C, A, B, C, A, B, C, something like that. W, X, and then Y. Maybe this takes out the top, and then it does give us that little bit more up. But nonetheless, looking for that 3-wave down into the golden zone, where therefore then you look for another cycle up for that third wave of the third wave. And so I have this, I showed you guys yesterday the Anchor VWAP tool, and that's just taken from the low of the move of where we got impulsive. And what I was saying is this is going to change. So by the time the daily open comes, we're going to have a new 4-hour candle that closes. And that's when you guys are going to want to look. Take the fixed range volume profile tool from the low, and then take it to the high. And when we get that next candle, do +1, always +1, just one candle only. So if it stays like this, if the range stays like this, then there's more confluence right there. Because remember what the impulse volume rules are, is that if it gets acceptance back inside of the value area high, well, then you look to the point of control. So, and if you lose the point of control, you're going to make new lows. I don't think that's going to be the case. Now, I would like it if it stayed here, because that would just be more confluence to back test this level. We left the range, we come and back test the range. We back test all this confluence, the golden zone, the weekly, the value area low, and then we shoot out quickly. We would want to see this move out quickly. And we also got the 4-hour order block right there. Okay, now if we end up for some reason having this, which I think might be the case when we have the new daily open, this volume may just change and the value area high may shift up here to this value area high. And so now if we start playing around here, there's a high chance we get accepted back in. Therefore, the point of control would shift back up to here, back up to the value area low of the point of control, or maybe even be exactly on the 618. And so now this is building up more of a case for a wave 2 coming in. I was also saying that I would not, so I'll delete that until the daily open, and then we'll pull a fixed range volume profile and see what we get if the value areas adjust. Now, I was also saying that I would not really be looking at the entry trigger in this case. In this case specifically, now, remember the rules when I had gave the lesson, I said this is completely context dependent, right? Now, why would I not be looking at the entry trigger? Because the confluence is all right there. It's all right there. If we were to unless the wick comes really deep, really quick, but why would it do that? There's no structure in this area. So if it goes up fast, it will come down just as fast. If we come to the entry trigger, I fear that it would just blast through and take the low, because remember, if the value areas are going to shift at the daily open, if there's a chance that the fixed range volume pools shift at the daily open and the point of control comes here, well, if we lose that, then we expect to take the low out. And so that's why I wouldn't necessarily look at the entry trigger tool here, but rather the 618, because this is where all the confluence is building up right here. You got the order block, that's 1. You got the golden zone, that's 2. You got the weekly support, that's 3. You got the value area low, that's 4. And then if you go to the weekly time frame, you have a weekly order block, that's 5. So that's 5 reasons. And then we know how this week opened up. So that's an impulse. So price is trying to go somewhere, right? Okay, so, but if you're curious to where I pulled the entry trigger, it was this change in market structure. So we got the change in market structure. Price takes the high. So I pull it from the high to the low, because we have to think backwards. Remember using this tool. And so that would be it. So I wouldn't necessarily be fearful if price came back down and came through this level. I would wait for that entry trigger, but I would not take it. I would not take this trade off the entry trigger until it reclaims the value area low again, or the weekly, because that's the safest bet right there, to be honest. Because I wouldn't like it if I would like this to be clean, essentially. I would like this to be a clean touch and then a quick move out, start working its way back up in 5 waves, 3 down, 5 waves back up, pull the entry trigger that way. That would be a better scenario, because this is where all the confluence is, right in this area. So that's just something to be aware of. I'm still going to leave it there because, why not? Maybe it does get respected, but I honestly don't think it's going to get tapped. So that was BTC pretty much for me. And if we zoom out a little bit, I think we all know the targets, right? We were looking 27 first and then 30. But honestly, if this is a wave 1, we're coming down for wave 2. I don't really care about this, but I definitely will take a small profit, and I'm going to let the rest run. But I think that price is just going to push through it. But that's one thing to just be aware of. If this is the top, then this is your next alert. So don't be afraid to take a short. And if you want to play it safe, wait for price to get back inside of $25,108, right? Reclaim the value area low. Like, wait for some form of confirmation. Wait for your market structure change, and then
use your entry trigger off that.
Yep.
Use your entry trigger for that.
Yeah. So like, if we make a new low right here, if this price comes down and makes a new low, then you can pull the entry trigger and be looking for the B wave up or the X wave up. But remember, the B wave, it's most likely going to be complex. So it's probably going to end up being a WX and a Y. So that's a really good point right there. Use your entry trigger on this one. So therefore, if you're using your entry trigger on this one and you're seeing your corrective structure that you want to see, well, then you got to remember the statistics are going to be in your favor, and that's going to give you your best possible risk to reward. So just keep that in mind. Now that's all I have for BTC at the moment. Pretty simple for me, because I think it's all pretty clear to us that we're impulsing. We just made another high. So it's clear that the weekly market structure has changed. Daily's definitely changed. And it just makes sense for this to be 1, 2, now 1, 2, massive 3, 4, 5, 4, 5. Okay, so that's BTC for me. And then if you guys were curious on the GMT one, what I was just on about, and I was telling you guys the other day how to spot these swing trades using the entry trigger on higher time frames specifically. You can kind of see it already right here. Spoiler alert. But how essentially it's done is you look at your market structure, right? So you see a lower high, a lower low right here, and price is just walking down. Lower high, lower low, lower high, low. There's your lower high, and there's your lower low. The first sign that you want to see. So remember, the entry trigger tool works the same on every single time frame. It really does not matter. Once you see this happen right here, where you have your low, right? There's your last high, and then you have your low. Price takes that high right there, makes a higher low and a higher high. So it took this high and it took that high. So what you're expecting, therefore, is a higher low. So what you do then is you pull your entry trigger tool off the high that it's just broken. Now, if it took this high, then you would pull the entry trigger from this high to this low. But since it's taken this high right here, you actually want to take the entry trigger from the high that it's just taken down to the last low. And then what you'll see is as you slide it over, right? As you slide it over, I already have one here. It's the same one. I just slid it over. But what you can see here is the respect of it, right? The respect of it. And in this case, you can see, I like to use the zones now just because it kind of cleans up my chart from having a whole bunch of numbers on it. It gives me a headache. But one thing you can do is you can just zone your stop loss. I think it's that one. Yeah, it's that one right there. So you can just zone where your stop loss would be. But you can see, guys, remember what the statistics say. Once you back test the level, there's a 5% chance that you come back down here and like a 1% chance that you come back down to the 0.005. Okay, and you can see that we never came back to the 0.12. And if you guys watched my stream, you'll see a lot of the examples show just that, even on the lower time frame. So this works on the higher time frame too, guys. You can still find swing trades. Okay, so now you're looking for the higher low, right? Because market structure has taken this high, it's taken this high, and now you hold the higher low, you're looking to take this high. You're looking for a higher high because market structure has shifted, higher high. And so even if you were to just be conservative and take this entry, well, I mean, that's still 104% at a higher high. And now you can see why. Now remember also again what the rules say. Now just because you see price come down once and then it opens and comes back up, remember what the rules say about the lower time frames as well. What you want to see is you want to see price find support in the entry trigger. You want to see it move away from it, right? Showing a change in market structure again, which we have right here. There's a change in market structure. And then you want to see, let me just do it again. You want to see the change in market structure, which we have here, right there. So price found support. It's moved out of the entry trigger. Now you want to see it come back down again and tap it. And then that's when you take it. That's when you want to look to take it. And so it's the same scenario on BTC. We open up the week, we move up. There's our wave one, and now we're looking for wave two. But wave one, actually, the base of wave one starts here. So where does our wave two come in? Well, if we're at a high right now, and we take this from the low to the high, there's your golden zone right down here. Let me go to a lower time frame really quickly. So I'm expecting this to come right up to this point of control. That's right here. I know I have all these zones here. Just kind of try to here. Let me just clean it up. So this is a golden zone. There's a golden zone right there, and it's on this point of control. And where does that put our? Well, I'm actually looking for it to kind of come a little bit because you have this poor high right here, and it will also be another change in market structure, and it will give you another entry trigger pull here. So we'll see how that confluence works out. So let's just assume that it's going to take that high and it's going to come to the weekly. We'll look at where that puts the golden zone. It puts it exactly on the weekly. So if we just assume that if price is coming up here to 618 and the point of control, it's going to take the high. One thing about these altcoins is that they don't really respect the CCs, the golden zones. So one thing that you can look for is the SS, the stronger support, which would be, so if we take it from this high to this low, there's our golden zone, right? If you put on the stronger support, put on the SS right there above the weekly. So we can just hit a little wick right there. We could hit a little wick right there, end up coming right back down. So this would support a case for BTC a little bit higher, but there would be our support right there. And so if we were to change market structure and take this high right here, because this is the swing high on the daily time frame, as I have it marked right there with a horizontal line, daily swing high, where what you would do then is you would pull your entry trigger now from this high to this low, turn on your entry trigger, and now look at where your confluence is. It's right there at the low of the weekly time frame entry trigger. And if this would fit a scenario of coming up, right? If it comes up and then starts to work its way down right into here, it would probably be quick and swift. So I don't know if it would be this quick and swift, but I mean, it's possible. We come up fast, we come down fast, but right into here. And then remember what I was just saying, the altcoins, they don't really perfectly respect the golden zones, but this would be an area of interest. But more importantly, I would like to see that one. I don't know if it comes that deep, but why would I want to see this one? Because look at where the channel is that we've been in downtrending for. There's the back test of the channel right there. That would be the back test of the channel. And it'll be in the entry trigger, the local entry trigger, inside of the higher time frame entry trigger. And it will be back testing the channel that's been holding us down, this downtrend. So we break out, we back test. We have the weekly time frame entry trigger. We have the weekly support. We have a smaller time frame entry trigger, and then we would have our fib pull from low to high, which is all in confluence. So we have 1, 2, the smaller one, 3, this one from low to high, 4. And then what we can also do, again, same thing as BTC, take your anchor VWAP tool, put it on the low, look at that. So as price is starting to work its way up, the anchor VWAP is going to come up. As price starts to move its way down, the anchor VWAP is going to start to fan out. And so that would be 5 confluences right there. So that could be a 1, 2, 3, you know what I mean? So if we go back to the daily time frame, then what is this? This could be a 1, a 2, a deep wave 2, and then now we start wave 3. There's 1, there's 2. Now we're looking for a big wave 3. So that's one thing out there on GMT. And I like it because it's in confluence with Bitcoin. So the reason I don't have this here, the 0.2 and the 0.05, is because remember, after we find support off of the entry trigger, business down here is viewed as finished. There's no reason to come back here again. And the Elliott wave count is suggesting that we don't need to come back down there again for another low. So therefore, I don't need it. I can just work off of the local entry trigger and use that as a stop loss, because even if I was to use that as a stop loss, the risk is insane, and I would never do anything like that in my life, right? I would not just enter there and then throw my stop loss 16% away. I would just quit trading. It just doesn't make sense. When you could just use the local one, right? And then you have a smaller entry trigger. So that's how I kind of use it in terms of looking for swing trades. And even on the lower time frame, I mean, I use it the same on all the time frame. But if we were to just even play with something like that, right, where we have this right here, the entry trigger in the entry trigger. So a daily entry trigger on a weekly entry trigger. And then what you'll see something like this. You'll see your wave 1 of your wave 1. So your sub waves, you'll see the first wave, and then you'll get the next wave. So maybe a 1, 2, something like that. But anyway, once price makes this first high, makes a higher low, and then a higher high, well, you're looking to catch this one, this higher low right here. So you could subdivide it. You could break the entry trigger tool down on the micro. So you take it from this high to this low, And then you're looking right there. There's your entry trigger. So you have a weekly entry trigger, a daily entry trigger, and a smaller term time frame entry trigger. And so what are you doing? Essentially, you're ending up breaking down your stop loss to the best risk to reward as possible. So you enter at that entry trigger, and then remember what the stats say about the 0, 1, 2, and the 0.5. So you just put at the 0.5, you're risking 1%. You put it below the 0.2, you're risking 0.9%. So there was a long trade setup that I just want to run you through really quick that was just over the weekend. That was just perfect. And we actually seen this entry happen live in the time. Now, I was talking and I was on a stream. So at the time, I didn't take it, which, it's probably okay that I didn't, because now we're looking at this scenario for this wave 3 of the wave 3, which is even better. But what you'll notice here is we were down here on these lower time frames at the time that this had happened. And it was here. So here's the perfect scenario of what I just explained about what I would want to see over here to break down the entry trigger on the micro, given the best risk to reward. So this is exactly what I was just saying. We have our initial low, right? We have the high and we have the lower low. We break this high with a higher high right there, right? And so when we see that, we're expecting a higher low. So therefore, you take the entry trigger tool from this high to this low and then slide it over, and look at what we got right there. Because we had to change your market structure. We had the entry trigger right there. Now, if you were to take this long here, what would you have risked? Your risk would have been, remember what the stats say about the 0, 1, 2 and the 0, 0, 5. You would have only risked 1.5%, right? Now, what about, okay, well, I don't like to just enter because I only see one confluence. Well, remember, you take this from the low to the high as well. Take it from the low to the high. Where's your golden zone? It's right there. This is another reason why I don't really like the golden zone. I like the SS. So I turned that one on, and look what you got there. Perfect confluence right here. Now, you have this little tool that you could have worked with, which is why I was saying you'll get your 1, 2, you'll get your 1, 2, your 1, 2. So clearly you've changed market structure on the way back down, right? Because you have all these lows that you've just taken out. And so you wait for another one. If you're not confident about taking this one, wait for another confirmation. There's nothing wrong with that. You're playing it even safer and giving yourself a better risk to reward. So you wait for this high, you wait for this low, and once you see this higher high, pull your entry trigger tool again. So take it from this high to this low, turn on your entry trigger, slide it over, slide your entry tool trigger tool over, and look at the perfect confluence perfect respect right there. So now that we know that this confluence is good, down here, business is finished. And as you see, price didn't come back down here. Business is finished. Okay, now you're looking at this confluence right here. Where's your confluence here? Okay, so I see one confluence here. We found support. I'm looking for another confluence. There's your confirmation. But again, I don't want to just take confluence just because I see price find support at, one entry trigger. Fair enough. But you got to remember the power of this. The power of this tool is just phenomenal. You could probably just trade this alone, to be completely honest. But when you go from the ultimate high low to the high, slide it over, and look what you got. Your golden zone, right on your entry trigger. What was your risk? You take the trade. You're risking 0.5%. So if you're playing it conservatively, like I said, break it down on the micro time frame. When you have bigger entry triggers on smaller time entry triggers on more smaller time entry triggers, play it safe if you want to, because then that will give you your best risk reward. So you could have risked 0.5%, and what would you have been paid out? Let's see. You would have been paid out. We took it there. You would have been paid out 39% and counting to just risk 0.5%. So there you go, guys. And it works on the same time frame. Every single time frame, it works the exact same way. The only thing is when you have these bigger, higher time frame entry triggers, break them down. Just how I just broke it down right here for you. Break it down in that same way. Just break it down in that same exact way, and you'll get the best risk to reward out of this. And then the stats will work in your favor, and you could do stuff like this, where you could even want 0.3. Because remember, after the entry trigger is back tested, it's very rare. It's very rare that the 0, 1, 2 is going to be touched. But you can use it as a stop loss. You can also use for a more safer entry. Just use your 0.005, your 0.05 as your stop loss, because we already know if price is coming back down here, it's going to take the low. So there's no point in sitting here watching your money get taken away for no reason. So play the stats in your favor, break it down, wait for better confirmation if you would like to, and then these stats can work. I mean, you could have gotten away with 0.1%, risk for a 40% reward. And if you don't believe me that this is consistent, go pull it for yourself and you'll see it everywhere. Literally everywhere. The best risk to reward in trading in this game right now. And I say that humbly because it's a blessing that, we're all able to enjoy something like this. That such a thing exists in the market where you can literally get away with 0.1% for a 40% reward. That is amazing. So that's how you would break it down on the micro time frame. And then you got to remember, as price is coming down on the weekly time frame, we're still expecting this entry trigger after we see the market structure change, right? After we see the market structure change here, we're expecting a higher low. So even though this is the weekly open right here, I can get rid of this now, but this is the weekly open right here. That long, nasty wick that we had, that's the weekly open. And then we get this move down into the entry trigger. So you're not taking this. You got to remember, when it's coming through the entry trigger, that's not when we take it. It's only when it comes back up and back test that we take it. And even though you see the back test here, remember, this is a weekly entry trigger. So one back test is not enough. You want to see the weekly candle move out of it, just like you want to see the lower time frame candles move out of it and then back test it. So now we have the weekly candle moving out of it. Now we're expecting the weekly candle to back test it, and then we go. And then again, we already seen the reasons to wait for the retest. So it's okay when you're looking at higher time frames and you have the entry trigger on that time frame. Wait for it to do the exact same thing that you would expect for it to do on the smaller time frame. Wait for it to move away out of the entry trigger and then come back and back test the entry trigger, and then you go.